Welcome back to Making Money Matter, ladies and gentlemen. I'm your host, Kerry Stevenson, and today I'm joined by Patrick Karim. He is the co-founder of Northstar Badcharts. We'll get into why he called it Northstar Badcharts in a minute. But he's a technical analyst and he's got lots of charts. And I don't know lots about charting and what charts tell us, but I love to talk to Patrick because he understands not just how charts work and how the markets are working, but also the psychology of markets. So we're going to do a bit of a deep dive. We're going to be covering some of the commodities, including my favorite one, as you all know, that is gold. Patrick, great to see you. Welcome to Making Money Matter, first time on the channel. Before we get into all the charting, just give us a brief background on how you got into charting and why you think it's important.
Well, thanks, Kerry. I'm super happy there to be on your channel. Look, it's like I don't know how many investors how they stumble in the finance world, but when I forget when they're in the mid 2000s, I was a system engineer in IT, making money, and then I said, what am I going to do with this? Then I Googled how to invest, and I didn't. In hindsight, I figured out, but I was falling on the penny stock forums, the scams, all that stuff there. Instead of looking at the good stuff, I didn't know anything about charting. I would buy stuff. In hindsight, I would look at the chart at the price I bought. It was at the parabolic melt ups. There's a whole bunch of techniques there. I'm going to show your viewers how they could spot if they're getting trapped or if they're, it's all about probabilities of getting trapped. Are they buying in a euphoric top? Because it's hard, you're hearing about a tip, from a guy. That guy's about to retire. He's giving you a great tip, but the price has already went up for somebody to talk about something, to feel good about something. They're not going to talk about their losers, right? Or stuff that goes nowhere. They're going to talk, hey, I made one bagger, two bagger. But once they talk to you about it, those gains are already in the past. Will there be more gains? Maybe. You're hoping for more, but you have to look at a chart to see objectively is how much more room is there in that gas tank? Because depending who tells you, right? It's like somebody close to the company tells you, okay, you might be close to the, at the beginning of the run, but when it's your, the jokes, right? The taxi driver,
Yes.
your hair salon guy, when they're giving you tips to buy something, it's like, oh my
Run.
goodness, man. Right?
It's
So
what we
after
call
that,
down here the barbecue mafia.
oh, the barbecue mat. Oh, that's scary, right? Just do the opposite. If somebody tells you, I would probably look at the charts and even think about like shorting that stuff. It's like, it's insane. So I came very close of getting wiped out a few times. I didn't know anything about risk and money management. I would put everything I had, but during the night, my heart was racing and I said, oh, something's wrong. And I was so lucky. I used to sell, and many, many times I almost got wiped out until I read a book called Secrets for Profiting in Bull and Bear Markets, written by Stan Weinstein. He's one of the greatest technical chart traders. And essentially, in his first chapter, he says, in the 1970s or 80s, he says the fundamentals for casinos were terrible. He says nobody wanted to touch casinos, but he was looking at the charts. He saw it was a beautiful base consolidation, because if nobody wants to touch something, that means the price has gone down or sideways, right? You get bored. But he noticing the price was starting to move up, and he developed a system where he could spot when the momentum starts breaking out, and he would go all in on that before people talked, because that's another thing. Once you realize that charts, they'll be able to show you something positive before people talk about it. And that's when you know that, oh, Amber Alert. I don't know if you have Amber Alerts in Australia. I just got an Amber Alert.
Oh,
You have those also?
we
Yeah.
have alerts. Yeah, it's when a child goes missing. Is that right?
Yes, yes, yes. So I just got one, but my girlfriend's probably gonna check it out there. And yeah, it's like if you want to see what's happening before people hear you, you have to look somewhere. So either, I know maybe like if you're a fundamental guy, you could start digging into the company's financials and all that. But the
Yep.
easiest part for me is just, you look at the chart. Like,
And it's
everybody.
easy for you, Patrick, but for those of us
Yeah,
that don't even understand how to look at a chart and how a chart works,
I know,
do you
I
do a
know, I
course?
know. Yes, well, look, we have a website there where we have like a learning center and all that, where we educate. We used to give well, we still do give master classes, but you're right. I'm talking like it's easy, right? But I've spent the 10 thousands of hours there. So people, I guess, if they want to if they want to leverage TA, well, they could probably subscribe to a newsletter or follow somebody, that knows about TA. But they could read books. Just reading that book, it's a $20 book. There's Secrets for Profiting in Bull and Bear Markets.
Who
Just
is
just
the
read that
author?
book, guys.
Who's the author?
Secrets for Profiting in Bull and Bear Markets. It's I could give you the link after. It's the first one there I have on the right. I've read it 4 times. There's post-its everywhere, and people could just do that. You don't even have to $20. It's a great read if you like it. And you know what's good about reading a book? Because if once you read it, when you've probably read tons of books, you'll feel in your heart, okay, that makes sense. It crystallizes. Often
Yeah.
people, when they write books, it's well structured. They make it so a neophyte, like a noob, could, it brings them to it's not difficult at the beginning. And if it makes sense for you, go for it. Because that's probably the best piece of advice I could give somebody. Always do something that fits with your emotional profile. Some people, technical analysis, even after they read a Stan Weinstein book or they hear me explain it, or Patrick, it still feels like astrology for men for them.
Yeah.
Then don't do it, because you need to believe what you're doing, right? You have to have a high confidence level, because sometimes when the price goes down and then you say, oh my goodness, it's like, what's happening? Is my chart trading system still functional? You have to believe in the concept of chart trading, bases and then measured moves. You have to understand it, and you have to believe in it. It's like, I could give you an analogy. Let's say you play poker, but you're not that good, but you go to the poker table, you don't know much about the rules. But then you play, but then you start winning hands. It could be luck, you think you're bluffing the pros, it's going in your favor, but then you start losing, you lose a hand, you lose 2 hands, you lose 3 hands, your stack's down 75%. Then if you don't have 5, 10 years of experience, or you don't believe in your poker thesis or the way you want to play, you're going to go on tilt, you're going to start panicking, you won't trust your system. And if you don't trust your system, then might as well throw everything out, if you don't like everything's going to go out the window, right? So preserving your emotional capital is easier when you have a system, your framework. I don't want to call it a system, like your framework for decision making is sound. You've seen it work. You know what to expect. Of course, there's always events, like low probability events, stuff happens, but you definitely need to believe. You need to have a high confidence level in your trading framework, whether it's fundamentals, right? Whatever it is. So that has to fit your profile, right? And also time frame. Like some people, they always say, Patrick, where's gold going tomorrow? Well, okay, there's a smaller time frame. I could be bearish gold on the daily chart, and I could even show you after. But it doesn't mean I'm bearish long term, because I could use on charts, guys. You could put monthly candles, right? Where a monthly candle has all the trading days during the month. So there's 20 trading days. Then I could have weekly candles, which have 5 trading days, and then the daily. So if you want short term, I could look at a short term chart, but it could just be a bearish pullback within a long term rising trend line. So gold, let's jump into. I'm gonna skip
Yeah,
the
I was just about to
question.
say, can we jump into gold and have a look at charts and tell me what's going on? I run the Australian
Yes,
Gold Conference. I mean, I do want to look at the charts, but on a long-term perspective, gold does what it always does. It holds your purchasing power. But
exactly.
okay.
I'll show you this. Yes. So there's one thing I came to realize, okay, guys, there's traders and there's stackers. And this is a notion I recently understood, maybe 6, 7 months ago. I always saw the eyes through a trader. I was very like, that, what do you call that? The horse that has these things now to see on the sides there,
Blinkers.
the blinkers. So
Yeah.
I was blinkers, but then I started understanding the people saying, Patrick, I don't care about the price. I'm just buying gold. And then I said, okay, why is he doing that? How come he's not trading it? But there's a reason. And then I said, I'm going to look at the charts. I put in my highlights here and I'll show you what gold does over very long periods of time, because it's a very important chart. And I've pinned so many here. Let's look at this chart, Kerry. Here
Wow.
is an American single family home price since 1968, price in fiat. So the house of the price goes up, it goes up, it goes up. You think you're wealthier, right? But people don't see it. And I'll show you another chart right after this. What's actually happening is your purchasing power is diminishing. Yes, there's cycles, there's bull and bear markets for housing prices. That's fine. But the reason this is slanted upwards within those cycles is primarily because they're just destroying your fiat purchasing power. And gold, the next chart I'll show you, gold tracks inversely the destruction of purchasing power. So the purchasing power, I define it as the US dollar adjusted for inflation. So it's the US dollar strength versus other currencies, but also how much inflation do you have that's offsetting that purchasing power, right? So because if there's so much inflation, then your dollar can't purchase as much.
Mm.
So that's it. It's going up. But look here, I priced it in gold. The price of a house here, I think I was like, I don't know, let's say 300 ounces of gold to buy your house. And yes, bull and bear cycles with the gold price and house prices. But look, over all that period of time, I could have drawn maybe a line that went flat. It's practically the same amount of ounces. It's not 10,000 ounces of gold to buy a house. It's not 1 ounce of gold to buy a house. It ranges 200, 400 over very long periods of time. And I'm sure there's charts like this where I could stretch it 5,000 years. And that ounce of gold or that quantity of ounces of gold you need to buy that house will be practically the same.
Mm.
So stackers, they don't care because they know about this chart. They're just buying whenever, and they don't care because they know over long periods of time that ounce will be able to purchase them whatever they purchased in 1970, whatever they purchased in 1920, whatever they, it's like there's a reason why people love gold. It's because you can't print it. They mine it,
Correct.
right? You can't print it. I know it's I think it's the first time I ever said that. I know a lot of people say that, but it's so funny. You just they mine it, you put energy in it. There's
Yep.
not that much that comes out. And even if you put more gold online, people will still buy it. I
Mm.
almost have like a thesis that you could dump 10 million, whatever, like the production could go bonkers of gold and people will still buy it because they value it. No matter how much there is, it will track your purchasing power. I think that's, look, the gold price, I think it could go down, but we need a severe deflation event where the money supply just, they decide not to print anymore. They decide, let's austerity. And then like, but who cares? Because even if the price of gold goes down, everything
Everything
else, the
else.
price of everything else, yes. And it's, so the trader gets upset if the gold price goes down, but the stacker does not care. The stacker, fine, gold price is $800. I'll just, that $800 now is worth, it'll be able to purchase me more than it did when gold was worth 1,600. I'm fine with that,
Yeah.
It's a mindset. I didn't understand that, but the charts, they, they prove that like, this is like objective evidence that that's what's actually happening. Yeah. So even for like a gold conference, they shouldn't be too worried about the gold price. They should just be happy that gold does what it's supposed to do. It's protect your purchasing power. It's not supposed to generate wealth. You could time it with trading 100%. We do it like, you could buy gold when it's about to break out. You could do a whole bunch of stuff, but on the longer term time frame, that's not what it's built for. If you want pure speculation or growth, just buy the SPX and forget gold, Gold's there to protect your purchasing power over very long periods of time. And that was my rant on that. Look, I'll just show you.
It was a
I'll
good
show you.
rant because it's actually
Oh,
the way you put it was how I often speak to people about gold, that it does what it always does, which is protect your purchasing power. But
yes.
but that's, I'm a stacker rather than I'm not a trader. But I think it's interesting what you showed us. But there's a oh hello.
I could show you this is the one I wanted to show you. The black line going down is the US dollar adjusted for inflation. So top left, 1971, all the way down to today. And that's gold price going up. It's a reciprocal, practically it's a river image, right? Of course, the ebbs and flows, they're not perfect, but as the US dollar is breaking down versus inflation, gold's just tracking that, like, uh, so
Yeah,
that's like
it's interesting. I just wonder how much, that chart with the US dollar losing 96% of its purchasing power. How much lower can it go, as in loss of purchasing power?
I think it's, I don't want to say infinite, but it's like
See?
if you see it lose 90%, then it loses another 9%. Well, essentially you've lost 99%. But let's say people see it, look at it today and they lose 9%, 90%. Oh my goodness, it lost 90%. Well, it lost 90% for the past 50 years. It's, if I keep zooming in on the chart, I could lose 90% of 90% of 90%. It's like, it's
Right.
almost until it flatlines. My question is probably, or my thought is on that is, it's going to go as low until the people take out the pitchforks and they do some austerity or something, like,
Yeah.
because you can't stop that thing. It's like something has to change. Either the US dollar has to get super strong versus other currencies, and or inflation has to go down the drain, and because it's a ratio chart, right? So for the US dollar and the purchasing power to go back up, inflation has to go like negative or not even, and the US dollar has to gain strength versus all the other currencies.
Which it
But
has
the US
been.
dollar, mm,
Which it has been. The US dollar has been strong
yes,
against all other
yes,
currencies.
that's right. But when you adjust it for inflation, that chart still looks terrible. And that's why the gold price is hovering up like close to all-time highs, is because even if the US, look in the 2000s, there were big stretches where the US dollar was going up and gold was going up. And people were saying, like everybody thinks the US dollar has to go down for gold to go up. No, because gold does not track the US dollar, it tracks the inflation adjusted. So there's big parts in the 2000s where gold was going up because the inflation was outpacing gold's appreciation versus other currencies. So there was good US dollar strength in some big parts of the 2000s, but there was more inflation subduing that, and gold just kept going upwards. It just said, okay, US dollar strong, but you're destroying the purchasing power of the Americans or whoever, like whatever. Gold said, okay, I'm going to price that in going upwards. And yeah, that's probably another important aspect. And it's hard, if you don't look at charts, guys, it's hard to see that because people they either say, oh, inflation's up. How come gold's not going up? Or they say US dollar's down. How come gold's not going up? But it's the inflation adjusted US dollar that gold tracks the most. And only looking at charts shows that objective evidence that shows like the chart I just showed you there, that it's reciprocal. Nobody talks about that on CNBC. Like you need the charts, like they provide some type of evidence, right? Of
Yep.
course, you can always change the time frames on the charts, and you could play with the bias. But look, when you've looked at all these charts repetitively, you really see the evidence there of what tracks what.
So what's your view? Have you got a chart on the gold price at the moment? I bet my
Yes.
audience out there is going, where's the gold price chart? Show me the gold
All
price chart.
right, let's do it. Yes, I'll do it. I'll do it, and I'll tell you what's happening with the gold chart. Let me.
And it's also interesting because there seems to be a bit of a disconnect between the gold price and the gold miners.
Yes, yes.
And it'd be good to have a chat about that, or get your views on why that might be happening, you know.
I'd love to. We'll share that with your viewers. So, okay, this is the gold chart, the monthly chart. It's just beautiful, above all-time highs. There's even a monthly defined breakout. It happened, guys, about 3 months ago. I think in December, we had a close above a beautiful breakout line. Here's the MACD. I don't use indicators that much. Share this one, but it looks great. Look at that. It's like here's the 2000s. You have
What's the MACD?
it's moving average, convergence, divergence. And I think it calculates a shorter term and longer term moving average, and it's able to spot momentum changes. Because often when the shorter term moving average goes above the longer term one, that means, let's say they're both going down, but then the shorter term one says, hey, so it means the price action on the shorter term is starting to go up fast. Bring up the moving average, and when that crosses over, then if it could stay above the longer term moving average, then you've got a sustained bull run. And look at it, it's beautiful. Like I look at that, I say, okay, I'm bullish gold, no issue. But when you look at weight of evidence, and yeah, I know people heard me say the but. Look, if I would just look at that chart and I didn't do weight of evidence and look at the ratio charts, how's gold performing versus SPX or versus CPI, I just go put everything in gold. It's done, let's forget about it. I'll just show you some peripheral evidence. So here's gold versus SPX. Okay, maybe not this one. I'll show you. I did one today. Yeah, that's my cat there playing war games.
Love it.
The cat always has to go sniff. You put something out, the cat goes around and she sniffs, and okay, that's not food. And then she just like,
I like the fact that Australia made the cut there. I could see the Aussie map on there.
where here?
No, on your cat. When the cat was on the world, it looked like it was on the world map, and I could see
Oh yeah,
Australia.
yeah, it was on Australia.
See?
Australia's
There
right
you go.
there. Yeah, Australia and the war games, it's fun because it's like an island. It's easy to control, and nobody bothers you.
Oh, interesting. Okay.
All right,
So
let
what do
me
we go?
get this.
What are we seeing now?
Okay, so this at the bottom pane is gold versus SPX. Here's the gold price in the 2000s. I use this as a great example. Here's gold versus SPX. Gold in a bull run will go up even if it's not outperforming SPX, but it will go up faster and harder if it's outperforming SPX. So you see guys here at the bottom pane, there's a black line. If it breaks out, as gold is outperforming SPX, I gain 41% in gold in the nominal gold price. Here's gold stagnating here versus SPX. Gold price still goes up. It's in a bull run, but look, it's like 2 years, it went just 27% up, which is great. A lot of people will be happy, but the crazy moves are in gold for traders is when gold is able to outperform SPX. So right now, that is not quite happening. That's the chart I'm gonna. So this is what's happening with gold right now versus SPX. It's breaking down.
Oh,
There's too much money. Look, see, it's a gold would have to get back versus SPX would have to go back above here. Look, this is my magic number. When gold's worth half of SPX, it's go time. But right now we're hanging gold's 0.41 of the SPX. So we're worth 4/10 of the SPX. That's where gold is. You want gold to start outperforming SPX because that's what it's telling us is the market participants, they're starting to favor gold instead of putting money in SPX, growth stocks, the price to earnings, the margins, is like purchasing power. They're trying to take money away from the SPX and they're going to dump it into gold. We'll see that in the ratio chart because you see here in the 70s when you have a true bull era in gold, you have to outperform SPX. And here during the 80s, terrible. But look in the
wow.
2000s, we were
Wow.
or that's what you want to see. So I want to see that, and that ties in to the miners. Goodness, the miners. It's like everybody, Patrick, yeah, I know. It's I have the best chart for the miners. It's right here. Here, this one here. So I have the ASA chart, and I think actually that's an Australian precious metals fund, the ASA chart. The ASA fund, it's gold and silver miners. It's since 1968. So I love using that because it has it's an index. Well, it's an ETF, but of gold and silver miners that have a lot of data. Because if you look at the Huey or XAU or JDX, the data feed it doesn't go as far. So I have that here. I have gold versus CPI. So that's another ratio that the miners track. Look at the miners price in the 70s. It goes exactly when gold's able to outperform CPI, and I could have put versus SPX. It's practically the same. The miners they love that, and as soon as gold is not able to outperform inflation, the miners go sideways. They dump. Here in the 2000s, gold's able to outperform SPX or inflation. Price goes up. Look, we know gold's above all-time highs and in nominal terms, but it's in CPI, it has not broken out yet. And look at the miners, they're not breaking out yet. They don't have that confirmed headwinds becoming tailwinds to have a bull era on miners. It's not there yet. There's too much inflation. So this is the best like rationalization. It's sure gold price is up, but the miners, their cost of production also goes up, right? The energy
Yep.
cost, everything goes up. So it's expensive for them so you want gold to really, really outperform inflation. So then the miners get repriced. Okay, look, the price of gold, we're making so much money. Even gasoline's $3 a liter. I don't care, man. Gold it's outpacing inflation. And that's what the miners track.
But
And
it's not outpacing inflation at the moment, or is it?
no, it's not. It's not. We haven't broken out. We're below all-time highs. And the miners also, I'll do it. I'll do a live chart for you. XAU USD divided by SPX. Let's do that one. And I'm going to add on top the miners, the ASA fund, new price scale, log scale,
He makes it
double
look
click.
so easy, doesn't he, ladies and gentlemen? He throws all things up, and I'm like, oh my goodness, I'm getting dizzy.
Yeah, well, I'm so used to my tool. It's like a doctor or a dentist.
Yeah.
He's used to his tools, right? And this is my tool, so I know it intimately. I think my girlfriend will get jealous there. So look, here it is, guys. This is gold versus SPX. Gold versus SPX is this long one, this one in the background. The orange one is look how it tracks it, Kerry. It's bonkers. And this is the miners. So look at that. Gold versus PX is actually breaking down. It's scary for the miners. Look, guys, I don't want to say I'm sorry for the miners, but this gold has to break out versus this black line. It's going to tell you that there's a change in behavior. I'm going to draw it here. Like there's another, let me move the miners. You see, you need a paradigm shift breakout. We came close in 2000. That was a bear market rally. The rally that got everybody excited in the 2000s. Essentially, it was just a bear market rally. You need that. You need this to do this, guys. You need something that happened like this. You need something that happened in the 70s. It hasn't happened yet, and it tracks it pretty accurately. So we you know what? It's sad, but we need unemployment in the States. We need USA.
To not be as strong.
Yes, and the initial claims, the I could have overlaid the US initial claims. Check this out. You're gonna say, this, Patrick, doesn't make sense what you're showing me. Check this out.
What is initial claims?
It's a US jobless initial claims. So it's not the unemployment percentage number. It's how many claims are like new claims of just unemployment. After that, whether they're removed or not from the unemployment is another story. But look at the ASA chart. I'm going to minimize. I'm going to bring the ASA chart on top of it.
That big spike is COVID when everyone was getting.
Yes. And that spooks the Fed because the Fed had their mandate is low inflation or protecting purchasing power, I guess, and employment, right? And I think it spooks the Fed when the initial claims go up. They have to do some type of destruction of purchasing power to save the economy, right? They have to print. They have to do something to save the economy.
Yeah.
But look at the ASA chart. It tracks the initial claims. Not perfectly, but it tracks it. So when there's a rush up, look at that. When there's a rush up in the initial claims, it helps the miners a lot. Look at here in the. I'll zoom in here. Here, when we had the COVID spike, initial claims shooting up. Well, the miners are pricing in all this destruction of purchasing power they're going to do. And look at recently, it's been practically to a T. So I'm keeping a very close eye on initial claims also. If they start breaking out, like spiking up, then we could have another situation where the miners, look, it all goes hand in hand. If the miners goes up, even if you didn't know about the initial claims, tracking it, well, you could probably look, oh yeah, look, it's tracking. Or you could somebody could just look at the miners chart themselves, and they don't have to do what I do and look at the gold versus SPX or gold versus PI. But if they did, they say, okay, now I understand why the miners aren't going up. Gold's not outperforming, So, or I could be totally wrong in the causation of it, but there is definitely a correlation. So this is part of the evidence, right? When you see all these historical ratio charts, and then you see the instrument that you want to trade, the miners or the price of gold, you want to trade that, understanding these huge cycles, what's required or what's previously been seen in those cycles for a true bull era to happen, then it's easy. All you have to do is look today and say, okay, well, you do a checklist. Gold price breaking out, check. Gold versus SPX, no check. Gold versus CPI, no check. So now you could mitigate your expectations, establish probabilities, and not be filled with hopium. You fill yourself with reality.
Yeah.
But you should seek comfort in that because now you have an objective, unbiased approach, your framework. And then when you see those check marks, then you start getting happy because I'm going to go bonkers and I like putting rocket ships on my charts. I'm going to put 100 rocket ships on my charts, even if the trolls, they don't like that. Because when I see gold breaking out versus SPX, it will be a time to celebrate because we know that's a paradigm shift type event. It's out there. We're looking for it. You just have to be patient and wait for it. But in the meanwhile, gold's going to do its job. It's going to preserve your purchasing power. It's going to do what it's always done, right? It's just for the traders. You greedy traders that want Lamborghinis. Well, you're going to have to, you want to trade it off gold futures. You're going to have to be a little bit more patient there for the crazy moves, right? Like gold price could still go up nominally. Like it could go to 2,700 and still not break out versus SPX. So the true crazy moves, a crazy move for gold, like faster, like I showed you the chart there. Once gold breaks out versus SPX, then you get these adrenaline, breathtaking, type of rallies. So price of gold could stay at 1900, go to 21, 22, 2300, and still not break out versus SPX. So hang on tight, man.
So what's just to break it down and make it simple for a simple country girl? What's the catalyst that makes it want to break out? Just remind us what that could be. Is it what was it? The initial claims going up, inflation coming down? Is that right?
No, inflation, the destruction. This is what's tricky about this. Gold is smarter than me and you and everybody else. The gold chart, I've often seen the gold will actually break out before there's a breakout in all the other things I showed you about. The market participants are smart. They'll start pricing in ahead before the news comes out, before like they get the tally of the initial claims. And even sometimes gold could be breaking out and say the initial claims are still down. Or the miners, let's say the miners are starting to break out. But you know how it is often, right? They give you initial claim numbers and then they revise them higher 3,
Yep.
6 months later, like they do with recessions, right? We could have been in a recession in 2008 recession that started in 2007. We were practically out of the recession when they officially changed the date of the beginning of it, right? So look at the gold chart, look at gold versus SPX. But yeah, if somebody wanted the catalyst, yeah, definitely initial claims. But look, there's so many. Look, this is the trap that people fall into when you try to put a story or a narrative on top of what, or a catalyst. Let's like, what's going to be the black swan or what's going to be the catalyst? It could be one catalyst, it could be two catalysts, it could be 10 catalysts that I might think it is, and then I realize it's something else years later. What I think is just look at what the aggregate of market participants are pricing in. And once you see those ratio charts happening, something will be happening. And of course, there's going to be a lot of experts that are going to be able to chime in. Oh, well, that happened. Oh, it's a fear trade. There's war there, war that. But I've seen so many examples that stuff that's supposed to move the price of gold in the stories happened, like the banking crisis in 2011. That goodness, it was the end of the world in 2011, 12. The Greece, the Italy, everything was, but gold was finishing its bull run,
Yeah.
and so that's why it's a trap to try to fit a narrative, because it might make you feel sleep good at night, but we have to admit that we don't know anything. The aggregate of market participants know a lot more than I do. But I love talking about it. Like, okay, what could drive it? But like you've seen these 40, 50-year charts, it's not just one event that's gonna, well, it could be one event. Yeah, why not? I can't, like a butterfly effect. Like something happens where it just, boule de neige, it snowballs into some crazy like route the government has to take to destroy purchasing power. Yeah, you're right. I guess it could be one event, Carrie, for sure. But
Patrick,
goodness, like,
we've talked a lot about gold, my favorite commodity. I want to just before we run out of time, I want to touch on silver, but also, do you follow all commodities? Do you follow industrials? I mean, you're charting. How do you cover absolutely everything?
oh man, one chart at a time. It's
Okay.
like, yeah, I would definitely cover silver. So silver's like the miners, guys. Silver, I could overlay the silver chart with that gold versus CPI. It's the same chart. It's the
Okay.
same chart. So silver, the way to see it is it's kind of sad for silver because it needs two things for it to go up. It needs gold to go up,
Mhm.
and it needs gold to outperform CPI to. So silver, that's why it's like always lagging and it's not at all-time highs, is because the gold chart versus CPI is not at all-time highs.
Right.
So silver is always, people like silver because once it breaks out, then like people call it the catch-up move, where in percentage the percentage gains are impressive,
Yep.
but it's still a low probability bet. Go with gold, guys. It's like I used to like, I love silver and all that, but seriously, gold's the big daddy. Gold's the master. Gold's the one who's going to drop the less when there's problems. Gold's the one that's going to keep like gold. It's like there's silver's like, I don't know what to call it there. It's like, I think in olden days silver was really popular because it was a smaller unit, right?
Yeah.
If you couldn't
Easy.
own an ounce of gold, or you just get a silver coin, right? So it got, but it's in trouble, silver. If gold cannot outperform CPI, it's in trouble. And silver does not like a US economy that's down the drains. It likes a recovery in the US economy. It likes, like, let's say the Russell or small cap stocks plummeting, it will plummet down with them. But on the recovery, as they destroy your purchasing power, silver loves those recoveries. But yeah, it's not quite there yet. There, goodness.
Okay, we've had a bit of a run with the uranium market, which does not seem to be going anywhere. Are the charts telling you anything on the uranium market at the
Ah,
moment?
goodness. Oh yeah, uranium. It got out of consolidation about 6, 7 months ago. It was a time to go like really crazy in uranium. Now it's super stretched for moving averages.
Okay.
That's so. Look,
Warning.
yes. So it's all about time frame, guys, right? So on the shorter term time frames, now it's due for a breather. I think we played the chemical chart. Now it hit its target. Now it could go sideways. We don't know how long it's going to consolidate, but it's like why why get trapped in a consolidation? You don't know how long it's going to be, you step aside, you wait for the consolidation to end, and then you could re-enter. But yeah, it depends, because there's a lot of plays in the uranium sector that they're still in a bull run, they're still doing great, but the metal itself, goodness, it's stretched beyond, like, it's reached its measured move, like the Sprott Uranium Trust, which
Yep.
holds a physical metal. It's just recently completed its bull market highs of 2007. There, it's crazy what uranium did, right? That totally went under the radar. Well, I think in the mainstream media, did they talk about uranium at all? Like,
No, no, not really.
not very much, right?
No.
But I look, uranium has been outperforming a lot of tech stocks. It's like been the unsung hero of the commodity space. If you want to make like good money, not financial advice, it was to play uranium like 6 months ago.
6 months
Right
ago.
now, it's stalling a little bit, but yeah, long term still bullish. Nothing's broken on the longer term for uranium.
Okay.
It's like, but on the shorter term, it's not the lowest risk, highest reward entry for the uranium metal. But the miners, there's some that the chart setups, they took their time to break out, and there's possibilities. But
Okay.
yeah, it's been a hot sector. And the reason we're talking about it now is because the price appreciated, right?
Sure
So that's
did.
why I'm asking if CNBC talked about it, right? It's like that could be probably the death knell. Goodness, I hope they
Yeah,
don't talk
once
about it.
once mainstream media starts talking about it, get out, ladies and gentlemen. The lithium. Just a quick view on oh my goodness,
It's terrible lithium, right?
terrible.
Yeah, yeah, it peaked. And look, I'm pretty sure we could backfill the news when it peaked. Oh, lithium, Tesla's gonna need hundreds, millions of batteries, China. When you start hearing about it, and like all the talking heads were talking about it, we have, oh my goodness, where's the price going? And that's when it peaked. So now it's like down the drains. But it's so weird because the fundamental thesis before that's why I have an issue with fundamental thesis, because the fundamental thesis before the price went up, oh, the price goes up with the bullish fundamental thesis. It goes up, and you create comfort. Oh, the price is confirming my thesis. But then as the price goes down and the thesis hasn't changed, we still need all those batteries. How do people conciliate that? Yeah, so you have to admit that there's a piece of the evidence that's driving that chart that we missed, right? Like, your bullish thesis should break down if the price is breaking down, because the market is smarter than us, right? It's telling you good. Well,
So
you
there's
might still
still
think it's bullish.
so in that situation, there's potentially this has overstepped the mark to the downside, and it could come back because the bullishness is still around. Is that what you're saying?
Well, it could. You still have to wait for the chart to tell you. So what happens often after parabolic runs and parabolic like crashes, you need a multiple of time to heal that bell curve. You just
Yeah.
can't. All the bag holders, they're called resistance now. Everybody that bought on the way up and didn't sell on the way down, as soon as the price tries to recover, yes, I'm gonna exit. I'm gonna exit. And as soon as all the people that held the bag give up, that's when the price breaks out. It's like that's the psychology we were talking about. It repeats over and over. So it's a question of time now. It could be I don't know how long there, but you need a time to heal, and the chart will tell us. A beautiful breakout line will morph into existence one day, and then it'll be great. And then when everybody says lithium, it's garbage, then it'll probably be time to load up again. But I don't think it's right now there. Yeah, I checked the chart recently for some of our members, and I said, you have to. If there's a bounce, it won't be back to all-time highs there. You have to. It's going to need time there.
So a bit more time on lithium. Okay, we're running out of time. I've got a couple more quick questions. Does gold always beat inflation?
In its bull run, yes, yes, yes. In its bull run, inflation and gold will go up. But as I've shown with the gold versus CPI chart, in a golden bull era, it will outpace inflation, definitely.
The property market, we're obsessed with property here in Australia. Do you follow the property market? Do you chart the property at
Yes,
all? Well, it'd be
yes,
very
definitely.
interesting to get your views on that, because I know there's talk in the US about the US markets under a bit of pressure, especially commercial, but residential also.
Yes.
Over here in Australia, we've had a lot of inflows for immigration inflows, and there's a lot of pressure on pricing going up, up, up and away. Be interesting to hear your views.
Well, there's nothing wrong with the housing market in the States. I think it's fair priced, because you saw that chart with the price in gold. I could have zoomed in there. Real estate is not expensive, guys. In real terms, it's not expensive there. It's historically it's flatline. It's not cheap. It's not expensive. So real estate, there's no breakdown in the charts. It's like, it's up and away. It's doing its thing. It might get a drawdown once like there's a recession, if we get a 2001, 2008. But I'm not. It's crazy to say that, because the housing prices here also, like my house, I doubled in value. I don't know, like in 5 years, like since I've had it, it's like it's crazy. But people have to stop thinking in fiat, because it's an illusion. They've destroyed our purchasing
Yeah,
power so much that your house didn't go up that much. You think it went up that much, but put inflation has a big part to do with, or the destruction of purchasing power has a good part to do with our pricing of our houses price going up. Because when you price in gold, it's the houses aren't cheap, then they're not expensive either. They're not. So there's still room in denominated in fiat for the prices to keep going up. I know it's crazy to say, but
so
if you
what
can't
you're
buy a
saying is
house,
that governments have destroyed the fiat currency, so you've got to stop thinking in fiat and start thinking in what? Gold?
gold or other, I don't care, measure it in something else other than fiat. You could take a chart on TradingView, divide my house. What is my house worth in silver? What is my house worth in a barrel of oil? What's my house worth in a stock market share? It doesn't matter. But anything other than fiat, you got to remove the fiat denominator, because all my charts, the destruction of purchasing power, you've seen it, top left, bottom right. That's what's happened. So you think you're getting richer, but are you really? I think my peak,
The number. Yeah.
yeah, my peak purchasing power was back in 2006 or seven. I don't know, like, we
Agree.
keep making more money, or like the money's coming in, but they're destroying their purchasing power pretty fast. So it's sad for the people whose wages don't go up equal or as fast or faster than their purchasing power. Because if you're not tracking that crazy destruction of fiat, you're the one complaining that you can't buy a house, right? Well, I don't say complaining, but you're right to complain, but it's tough out there, man. You need the parents' inheritance. That's what's happening in Quebec. They're giving,
Yeah.
they're
Happening
they're
here as
they're
well.
taking money. Nobody gave me money. I had to find my first 5%, to deposit in the house. But now the parents are rich. The baby boomers have a whole bunch of money they made in the SPX, and they're giving out 40, 50, $100,000 to their kids for their first house. And the kids aren't leaving like I did at 24 buying my first house. Kids now are staying till they're 30. And I bought it alone. Now you know how it is. They have to go in couples, right? To buy I don't want to rant too long, but I saw the future. I sold one of my houses in Laval, and the people who bought it was a family of Vietnamese. There were six. I kind of see the future there, that eventually, and I think even my partner in England, he told me this, that people are going together, multiple families, our cousins, like two revenues is not enough anymore to buy a house. People, they
Oh,
have to think outside the box. If you want to own a house, you'll have to buy it with your in-laws or if your parents, to have multiple people to be able to pay that mortgage.
maybe that's God, the universe, whatever you want to call it, turning around and saying, you got to stop being on your own. We're going to bring the families back together. This is forcing you to
Right,
live with your
right.
in-laws.
Yeah, yeah.
It's always been good to chat to you. Now, when I spoke to you, gosh, 18 months ago, you and I last spoke on another channel, but I did say then, let's get you back on a month. Here's what I'm going to say to all of my listeners out there. We're going to bring Patrick on every 2 months. Every 2 months, we're going to bring him back on, do some more charts, do some more discussion, and help you understand perhaps better ways of doing things. But this is never investment advice. make sure you go to what's the website again? Northstarbadcharts.com, northstarbadcharts.com. You can also follow Patrick on Twitter. His Twitter handle is Northstar Charts. Any final words from you, Patrick?
Northstar Charts is my partner, Kevin. Mine is Badcharts 1.
Badcharts 1.
Yeah.
Badcharts 1, because you saw all those Twitters and all those highlighted charts.
Yes.
Like a plethora of information there. Badcharts 1. So make sure you follow Patrick on that one. Final thoughts go to you.
No, it's fun to catch up, and let's see in 2 months there what happens to the markets, gold, and all that. There, it's going to be always great catching up with you.
All right, bless you. Thank you so much for coming on to Making Money Matter. Ladies and gentlemen, make sure you hit the subscribe, the like, share this with everybody, and we look forward to seeing you back again soon. Thanks, Patrick.
All right, bye.